Well, good morning. It's Michael DeVille coming to you from beautiful Phoenix, Arizona. This is Halloween in 2020, October 31st, 2020. I'd like to address questions that we had from Tuesday's live webinar, and I want to talk about cap rate. Now, cap rate can be expressed many different ways, and you'll change the cap rate by not including all of the expenses. Now, I deal with a lot of baby boomers and an awful lot of high net worth individuals. And when we do an income stream on rental properties, this is an absolute passive investment. They're really not too terribly involved in being the landlord or working with the tenants. They'd like to just pay the money and get their check each and every month. In which case, then they have a few more expenses than someone that's going to be active. Maybe they're in the real estate business, or they're enjoy interacting with tenants. Maybe they're local. But I always include in my cap rate a management fee. Management fees, it's a business expense, but it allows you a lot of safety, keeps you out of trouble. You don't interact with your tenants. They handle virtually everything. You get paid a very modest fee for that, but it is a fee that goes into the cap rate. Also, whenever you put a tenant in a property, you always have some kind of a cost, whether you're property management because they're spending time on your behalf, or maybe you paid a real estate agent to bring you a tenant, and they're bringing you a client, and you pay for that. That's a service, and it's a cost that you're going to incur. Same with a vacancy factor. And we talk about a repair escrow because things do break. I mean, there's just no way. I mean, the properties all they're going to need painting over a 10-year period. Roofs eventually wear out over 30 years. You're going to have to put in garbage disposal, and things just break in the house, and we need to have a repair escrow for that, of which we account for that. So if you do our calculation form, which we have, we standardize a cash flow standardization form, which we try and put together all the costs you as a passive investor are going to incur. It lowers your cap rate. So the true picture for a passive investment on one of our single family residential properties is a start rate about 4.5%. That has been a regional cap rate here in Maricopa County, which includes Scottsdale and Peoria and Gilbert and Chandler and Phoenix, some of the really fabulous markets that we have here in Arizona, and gives you a very true picture of what you're going to earn. And of course, we're in a LERP or a NERP environment. That's a low interest rate policy or negative interest rate policy. So if you can get 4.5% pure unadulterated cash flow after all your expenses have been accounted for initially, and it's going to start probably the very next month. So if you buy a property in June, you're going to start putting a tenant in July, and you're going to get your rent check in July. Within 30 to 45 days, you're going to start getting this cash flow. I mean, it's just a great investment, and it's 3 or 4 times what you can get everywhere else. But it's been a regional cap rate of about 4.5%. And that's been standard for a number of years here. As the prices of the homes go up, the rent has been going up at the same time. So they've been kind of staying about the same delta in between, and this is what they've been receiving. However, I'm going to tell you that rents are going up significantly, prices are going up significantly, and if you bought your house in 2018, you're getting a whole lot more than 4.5% cap rate. That is absolutely positively the truth, and you've earned a lot of income increases, and you've also had a lot of capital gains on there. So it's just a very compelling investment, and I believe everybody should really have this. And it's just a great inflation hedge. It's just a great growth vehicle for income, and it's passive. You can do this day in, day out, and we're very good at what we do. Now, if you'd like to explore us, we're more than happy to talk to you about it. We are fiduciaries here. We represent high net worth individuals. We represent pension funds, investment groups, and we do our very best to give you as true a picture as we can possibly get. And if I can help in any way, I'm here. You're welcome to call me at the corporate office, 602-942 4200, or you can email me at michael@michaeldeville.com. My very best to you. Bye-bye now.